Alright, Tasty Nation, how you guys doing? Smart Coin Trader. Little post-market peak. It's about 3:30 Hawaii time, 6:30 Pacific time. Probably more like 9:30 East Coast, 9:36, somewhere around there. Alright, let's just get to work. So today, as you can see here on your Tastyworks platform, you will see QQQ jump to 45. Now, this is good. Anything above 35, I start to pay attention. But here's the thing. What I like about the charts that I have that I use for Thinkorswim that are not available yet on QQQ is what's IV rank. I want to give you some context. So this number is really good right here, 45. That's awesome. And today was perfect 45 days expiration. Right? See, look, right here. So as far as normal expirations, this expiration is perfect today, 45 days expiration. If you miss today, you can go ahead and put something on tomorrow. Now, here is what I love about the charts that I use. Now, here's my Thinkorswim charts that I, of course, have a little bit of money in here just so I can keep the account open so I can use the charting. But I do all my trading in Tastyworks from Tastytrade. Now, here's my daily chart, okay? I'm showing, I think, I'll make it 6 months. And this is my IV rank chart. See this? So look at where it is. Now, just look what a difference a day makes. Now, I'm sorry, this is NQ, which is the futures, but here's QQQ, the one we were just looking at. All right. Now, look what happened. I'm going to zoom in real quick, right? The last few days. 1, 2, 3, 4, 5. Okay. IV rank yesterday, look where it was, 32. In one day, it jumped over 10 points. Okay? So now you know. So Mark, how often does IV rank get this high in QQQ, say over the last 12 months? So I'll go 1 year and I'll zoom out. Should I already zoom out? Let me make sure. Yep, we're good. So here's how many times you can count in the last rolling 12 months. How many times you got above 45.79, which is, see that crosshairs right there? Okay, you can almost count, like just by eyeballing it, you can see, right? 1, 2, 3, 4, 5, 6, maybe 7 times in the last 12 months, right? And then look on average how long it stayed at that level. All right, it shot up a little bit higher. Almost every time I got to 45, it went higher. Okay, and usually hit 50. And after it hit 50, let's look at how many days it stayed up there. Or better yet, how long it took to get back down to 25, which is this red line here. Green is 50, red is 25. So you can't, hold on, let me try and do that for you. Is that better? So here, you can see, right? And last time it got to 50 here, it shot up as high as 66 or so, and it got as high as 70 almost, right around here. This is just last month in August. All right, but let's see these peaks right here. Let's look at how long it stayed up there real quick. I'm going to zoom in. Oop. Okay. Oops. Above 50. Let's count how many days to get. Oh, shoot. I got to zoom out a little bit. How many days from here to, well, actually never got down to 25 yet, but it did get to half. So if I slide this over right here, what is that? 67. So, well, 37. Okay, perfect. Look. 1, 2, 3 days. That's it. Okay. How about here? I'll scroll back here. How many days? 1, 2, 3 days. Basically 3, maybe 4 trading days. All right, that's it. And that's how fast volatility can collapse. Over here, it did drop all the way down 25. Let's look from here to here. How many days that took? Let's go from the highest point. Well, let's just start from when it hit 50, and it did it first time right here. So I'm gonna try and use a longer period. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, basically 12 trading days, and you got chopped down back to 25, which is more than half. So I love that, and I want this to pop, because when this pops, you can sell premium for more money. So if you take a look at yesterday's video, we went over the golden gecko, right? And it should be there, and I'll zoom in and out, check on the percentages. I want this close to 84% as possible, and I want this close to the 2 standard deviation line as possible. What am I talking about? If you're new, I want the put that I'm selling to be close to 84% probably out of the money, and 1 standard deviation out of the money, which is this first set of vertical dashed line below the stock price, which is right here. That's the put. I also want to sell the call 1 standard deviation above the current price, which is right here. See these vertical lines? And basically, I just want to get this to close to 84% as I possibly can, or as close to this vertical dotted line that I can. Now, at the same time, I want to buy a put 2 standard deviations below the current price, which is this line right here. And I want to buy a call like that. See? That's it. So what do I want to happen? I want the stock price to basically stay anywhere in this green area, but the main and most importantly, I want this number to collapse. By when? At the end of 45 days. Now, I'm going to sell this to some other person, right? Someone is going to buy this from me because I'm selling it to them. You're going to sell it to them. And you want to know, what is your probability of making any money? You have a 72% chance of making a profit. That's POP, probably your profit, right? You're going to be selling this for $73 because it's 73 cents per contract, and a contract is 100 shares of stock in QQQ. So 0.73 times the 100 is $73. So that's how much you're going to collect. You're going to collect $73 for this trade, for this basically bet. Now, what are your chances of buying it back? If you're selling this for 73 cents, what is your chance of buying it back? Because you're selling first. I'm going to sell it to some guy first, and I want to buy it back at a later date for less than what I sold it for. And I want to see, what are my chances of buying it back for 50% profit, or 50% of what I sold it for. You click on the middle button in Tastyworks, and it'll show you I have almost a 90% chance of making 50% of my max profit. And that's what I love about this. You notice I don't really talk about strike price because I don't care what the strike price is. I only care where that strike price lands in the probability section, and that's why I use this. That's why I have this tile highlighted. To see the strike price, you can see it here, but if you want strike prices, excuse me, I can't talk, they're right here. Just like a normal options trading would be right here, right? So you'll see the strike price. I'm selling the 136 put, and I'm selling the 153 call. So I want the price to stay in between 136 and 153, or click this tile. All right, that's how easy this platform is. And if you watch yesterday's video, actually the video I put on this morning, but actually posted it last night, you'll see the difference on what I could sell it for. All right, now IB rank is collapsing this after hours, so it might be a little different, but you know, at least you can kind of get an idea of what I'm talking about there. So what I did is I'm showing you here the exact same strikes as I did in yesterday's video to show the difference. Yesterday, or actually say this morning or last night when I posted the video, you could put on this exact same trade for roughly 76 cents, and now it's at 95 cents or $95. Okay, so I went back and double checked, and here's about where we ended up, I think, yesterday's video. And these are the exact same strike prices as I did in yesterday's video. All right, 138, 154, 163, and 129. Okay, sorry, double check. So here's the correct strike prices. So as you can see, right now it's at 90% credit. It is after hours, though. IB rank is 45. And so right now you can collect 90 cents instead of 80 or 81 cents as I did last time. But here's the thing. Those are the exact same strikes. And yet that was if you were at 1 standard deviation out of the money. You see how it's different now? This is not 84, it's 78%. So if you missed this morning, for example, and didn't do anything today, and you were going to do something tomorrow, it'll be different. So that's why this is neat. So now I'm going to move these to get close to 84% as I can. That's closer to 84 than 86. Here we go. See, and then I'm moving positions out. Now, so this is kind of what I'll be looking at if you're doing something a little different. If you're asking why the price difference or why is it less, it's probably because now I am further out than I was before. Last time I think I was 83% on both sides. If I bring it in a little bit, there's no 83 though. So that's what I mean by how you can play with the positions. So when I was playing with them pre-market, or actually last night, way pre-market, I guess, right? I had both my puts and calls at 83%, and I could collect more money. And these were also more on the wider side. Oh wait, this got to be 2%. That could explain a lot. It's roughly about the same. IV rank only shot up by 10, but I'm still looking for it to go even higher so I can sell these for more money, and that's the goal. When IV rank pops, this will go higher, and you can still be one standard deviation way out of the money and collect more money. So again, this is something I would definitely do with the liquidity. Now, what's great about Tastyworks is price, meaning your cost. They charge $1 to put on an options trade, but nothing, meaning it's free to take off. So by using the Tastyworks platform, using the link here, you can get this it's a little bit different, but if you look in the bottom of the description here of this video you're watching, you'll see a link that says Get Tastyworks here. Click on that, and you can get this platform for free. And what I like about it too is the cost. You're gonna probably save you're gonna be saving 25. It's gonna be 1/3 the cost than everywhere else. I mean, free to take off the trade. I mean, you could put this on and that's it. It costs you nothing to take it off or manage a trade later on. So that's another good thing I like about it. All right. Let me see what's going on in the charts right here. I'm gonna go to a 15-minute chart. Here we go. So here's what happened today. So what I was watching is, so I was looking for when the market opened here, if it would break down below or above what happened pre-market. So here's pre-market, right? So as this is good. So as I'm watching the market tick, 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 50-minute chart, I want to see if it go below. Well, I was looking at, actually the lowest pre-market was here. So I was looking when the market opened if it will go below or above pre-market. So of course, right off the bat, I'll zoom in like this, right? Each one of these ticks is 1 minute. So 1 minute, 1 minute, 1, 2, 3, 4, 5, 6. Roughly the first 10 minutes of the day already, it kind of broke through here, this tick. So I'm hoping for a lower day because why? Because I want IV rank to pop. And I'll basically zoom on, you can see what happened. It did, it rebounded, right? And then, but it couldn't go above the high, and then it hit the ceiling here and kind of went down. That's a 1 minute chart. Here's a 15-minute chart to give you a nice smoother line here. All right. So now I'm looking at after hours. I do not want it to go above the high, and I of course I want it to go below, but I'm looking to see what happens, tomorrow morning, which is over here, and of course throughout the day. That's what I'm looking at. All right. It doesn't really determine what I'm going to trade or whatnot, or how I'm going to trade. It's just more for fun. It kind of gives me an idea. Maybe hopefully I'm looking for opportunity, and I do the same thing in all of them. So here's the futures, which you want to look at, because /NQ, here it is. All right, so okay, so as you can see, the futures is right here. It's pointing up, but it's not. I don't want it to get above here, and I want it to go lower tomorrow. Right here is S&P /EH, which is the E-minis, otherwise known as the SPOOs. You hear Tom and Tori talk about the SPOOs. Look, they're almost exactly the same, right? And right now, nothing's going on really. All right, you can check out diamonds. Excuse me. you can check out diamonds as well. And there you go. And here are the major, oh, that's oil, but you can do the same thing. Here's oil, here's mini, here's a NASDAQ. Here is, yeah, we don't really trade this anymore. VIX, so wait, hold on. Dow Jones minis, here we go. Okay, so I'm looking at the same kind of stuff here. And what I do honestly look for is, let me go to here so you can see the ES and I'll zoom in. So usually when you have big down moves like that, it does bounce back. Usually I look for it to retrace like maybe halfway. So see how it went from here down to here. Look at where, kind of like where halfway is, right? And sure enough, it did that on the open, but then boom, it went way above it. And of course, it went above over a pre-market highs, and that's what, you know, kind of gave me an idea it would go higher. So yeah, high, low. Oh, zoom in. There we go. Kind of like the high, kind of like the low. So I'm kind of looking kind of in between. It's kind of where it retraced to, see. And I kind of wanted to kind of come up a little bit tomorrow morning. Like in the morning, I kind of want to get up here because it's a little bit higher than I want to fail. That's what I'm looking and hoping to happen tomorrow. All right, I gotta go. You guys have an awesome night, and I'll talk to you guys later.